Welcome back, everyone. Today I want to make a video on the stocks that I'm buying for the month of January and February. Hard to buy stocks when they're actually going up very drastically. For example, my top four here, they're up 400+%, 373%, 326%, 310%, 294, and just it's a whole bunch of them that are going up. So it's kind of hard to pick stocks once they're all the way up. But usually the key is to buy them when they're down. So basically, I want to cover which ones I'm buying for this month. So if you're interested, make sure you stick around and let's dive right in. Stock number one, we have Transmedics Group. I do own shares of this company. I have $1,000 invested in it. I am down $1,400 as well. I do have 17 shares with a total average of 144 per share. It is down, but my portfolio diversity is only 0.26, and I do believe that this stock is undervalued. Transmedics is at the forefront of organ transplant technology, which is offering innovative solutions for organ preservation and transport. The recent dip in the stock price makes it an intriguing buy in my opinion, especially with its expanding fleet of aircraft and operation centers aimed at streamlining organ logistics. There are definitely risks with any stock. My buying strategy for TMDX right now is buying $15 per day when the market is open, and I've been investing slowly. So you invested $45 last month and 337 or 4.85 shares since your last order on October 16, 2024, and it gives you an estimate. So you'll invest 3,000 by October 16, 2025 if you keep this recurring investment. So in order to minimize my risk in case it does continue dropping further, I am dollar cost averaging my position by just buying at these prices like this. Additionally, if my put credit spread doesn't work out as planned, so I would be forced to buy these shares at $50. In my opinion, that wouldn't be a bad trade because stock price is currently at $60 and I could buy it at $50 at that time. That's why I do put credit spreads usually, because I get to collect premium in order to buy more shares. Risk associated with Transmedics is the recent reports that accuse Transmedics of fraudulent billing and organ trafficking, leading to investigations which could severely impact its reputation and financials. Aircraft and operational risks. The reliance on an aviation network brings risk of delays, cancellations, and high operational costs, potentially affecting service delivery. Regulatory and compliance risks. The company could face tighter oversight or restrictions due to the ongoing allegations. Despite these risks, though, Transmedics' technology and market position in a niche yet critical field offers substantial growth potential if they can navigate through these challenges. Investors should keep a close eye on how the company responds to these allegations and its operational and regulatory landscape. Stock number two, we have AMD. It recently announced products at CES 2025, including its next generation Ryzen processors and the RDNA 3 graphics cards, aiming to capture more market share in both the PC and enterprise sectors. The potential I see for AMD are in the AI, the gaming, and the data center sector, which could lead to significant revenue growth for the stock. I also see potentially strategic partnerships that will enhance their market position. Some of the risks I see for AMD are the cyclical nature of the semiconductor business, which could lead to overproduction and a sudden drop in demand, intense competition from Nvidia and Intel that can pressure their margins as well. Although Intel is still down as well, I do think Intel is also potentially a good one to buy, and that will also just create more competition for AMD. But I do like a lot of their GPUs and a lot of their hardware that are in a lot of the computers that I use at work and just pretty much everywhere too. So I think you should not underestimate AMD. But that's just my opinion. Other risks include the potential supply chain disruptions that could affect the product rollout for their new generation GPUs. Stock number three, we have CVS. It is currently at $54. The max that it's been has been around 112-ish, and I do have shares at 1,600. I am currently down 6% right now, and I have a portfolio diversity of 0.39%, and I do have 29 shares of the stock. Same as the other ones, I do have recurring investments as well. I have $15, buying every day that the market is open. And I recently increased my recurring investment to 15, and that's why that this month I invested 305, and last month it was only $6. But I am buying consistently, doing my dollar cost averaging positioning. CEO is David Joyner with employees of 300,000. It was founded in 1963 with a market capitalization of 68 billion with a price to earnings ratio of 13, which is relatively low compared to the average in the market. It does pay a dividend yield as well at 4.94%. So I am bullish with CVS because they are integrating their pharmacy with their Aetna insurance or medical insurance that they're offering in the markets. So I believe that in conjunction with their physical pharmacy storefronts and the healthcare services sector and the insurance, that will create a holistic plan for them. So they'll create different touch points for customers and clients to get integrated with their system. And I think that in general will help clients get better, and they can also get their prescriptions from CVS. So I am very bullish. I do hope that they do better in the future. And of course, the risks for it are the regulatory changes in healthcare that could impact their profitability or operations. And the transition to their new store models could be costly and also decrease profitability in the future. And any issues with Aetna integration could also lead to operational inefficiencies. Stock number 4, we have NU, or NU is the stock symbol. I do have $7,500 invested with a average cost of $12.44, and shares I have 608 with a portfolio diversity of 1.83%. Total return right now is negative 0.27%. I was down earlier and I did make another video covering NU specifically, and at that time NU was at $10, and I did end up buying 200 shares from when I made that video, and so that's how I ended up with 608 shares. Same thing with the other ones. I do have a recurring investment of $15 a day when the market is open, and same thing, 378 this month and 49 last month. I could potentially invest 2,400 by August 19, 2025. So hopefully it stays down so I could buy more shares. To cover some of the information for the stock, it does have a market cap of 58 billion, a price to earnings ratio or PE ratio of 32. It doesn't pay a dividend yield yet. Its current 52 high was $16, and its current 52-week low was $8.51 per share. I'm very bullish with NU Holdings because of its investment in Latin America. Right now they are in Mexico, in Colombia, and they started in Brazil, and they are introducing digital banking to the youth, which I believe will continue growing their revenues when they start introducing credit cards, personal loans, and a whole bunch of other options that people can invest in. And all that digital banking will continue helping America grow as well. And as those economies grow, especially Mexico and their developments with China, I believe that's going to drive more people to invest into their own countries. So they'll take out more loans to build those businesses. So that is my hope for the stock. I do hope that does happen. I do want every country to flourish. So basically, this is the SoFi of Latin America. Finally, the last stock on this list, I am adding Tilray Brands. I know that is a very speculative play, and there's also high risk because it is not federally legal for recreational use, but to medical use, it is legal to some extent. But I do really like this stock because of its diversification into the craft beers business. And that alone, I think, has a lot of potential, especially once regulation allows. That is my hope, at least. I think that they can infuse MJ into those craft beers where you'll have a drink with infusions of MJ. And that is why I'm bullish, but definitely it is a long-term play. I am a strong believer in investing when things are down, when they're beat up to all-time lows. That is the time to start buying them. That's why I do have a position in it. I have 2,117 shares with an average cost of 119 and portfolio diversity of 0.58% with a market value of 2,393, and I am currently down 5% right now. Similar to the other investments, I am investing $15 per day when the stock market is open. So last month I invested 84, and this month I ramped up my investments and I invested $904 with a total share accruement of 567 shares. And by November 28, 25, I should invest $4,000. So hopefully it stays down so I could accrue a lot of shares. I don't see Tilray specifically going out of business. That is a risk for a lot of the other smaller companies because they are not really diversifying into other segments. There are other competitors out there too that I actually like, but Tilray, I've been invested in it since Afria, and Afria and Tilray merged, and that's how they got their brand new name. But again, this is a very speculative play. It is not approved yet, and that is why it's down, but that is why it's a buy, I think. Finally, I wanted to do a ranking from number 1 to number 5. Number 1 being the most buy in my opinion, and number 5 being also a buy, but being pretty much one of the high risk ones. So number 1, I am putting AMD as the top one to buy. Number 2, I am doing New Holdings, and number 3 is CVS. Tilray, because of all those speculations that I mentioned during the video. And number 5, I am placing Transmedics due to those recent allegations of fraud and operational risks involved with aviation logistics. And that to me is very uncertain. So I am putting it at the least attractive at this moment because of the risk reward assessment. Otherwise, I am still buying all of them, but if I were to give them a ranking, this is the ranking that I will give them. You probably don't agree. A lot of people actually really like Transmedics. I've seen a lot of videos of other people really considering it a buy, like a all-in kind of buy or high conviction type of stock. I do keep a very diversified portfolio though. I have a combination of all stocks in technology, in gene editing, and Transmedics, cannabis, CVS, so many sectors that I'm involved in, and I like to keep a very diversified portfolio, and I do encourage you to do the same thing. Also look at other ways to invest outside of the stock market, such as real estate, cryptocurrencies, ETF, bonds, high yield savings accounts, CDs, so many options out there. So make sure you do your research, talk to a financial advisor because I am not. Thank you for watching this video. It does mean a lot for the channel. I do hope that we see you on the next one. Make sure you like it. Comment in the section below what you think about the stocks that we talked about in this video. Are you buying them? Are you selling them? Have you been holding them for a long time? Just let me know your feedback. It does mean a lot to me as well, and it does help me get better and help me provide better videos in the future. Otherwise, make sure you subscribe, and I do hope to see you on the next one. See ya.